first thing to think about when you're considering if you should rent your house out or if you should sell it is if you can afford it. Your loan amount on the new home is definitely going to be higher if you choose not to sell because you won't have that equity from your current home to put down on the new home. Now, we can use your rental income from your current home as income towards the lenders. So if you're renting your home out for $1,800 a month, you can use a portion of that towards your income. So the lender can count that as monthly income to qualify you for the new loan amount. Another thing to consider is, do you actually want to be a landlord? This is something a lot of people jump the opportunity because you may have heard real estate investments are always going to be a good investment. However, there is a lot to manage when it comes to residential rentals. You're managing a whole family, collecting rent, keeping track of that property and upkeeping it because at the end of the day, it is your investment. And so you have to make sure that you are able to check in, fix things that are broken, and make sure that you're able to collect rent and handle situations that may come up as a landlord. If you choose to keep your home as a rental, the process looks something like we would start shopping for a new home and we would find something that you love. While in the process of that, we'd get you under contract and we would start then advertising your current home as a rental. Again, in order to count that income, we would have to have a lease agreement in place before closing of the new home. Once you are through the process of buying the home, so we've done your inspection, your appraisal, and everything checks out on the new home and you're ready to go, we line up those dates and we get you moved into the new home and the renters are then able to move into your current home. With that being said, if you do want to use some of your equity from your current home to put down on the new home, and if you need to do that, we can do a line of credit. It's called a home equity line of credit. Most credit unions and banks offer this. What you basically do is take out a loan against the equity that you have on the current home, and then you're able to put that down on your new mortgage. Now, we have to really consider if this is going to be worth it when we look at adding new debts. So then we're going to have two loans instead of one. And then we also have to consider if that bumps you out of being qualified because you're going to take out a new debt. So you'd have to qualify for the line of credit as well as the mortgage. If you have any questions about using your current home as a rental instead of selling it when you're ready for your next house, give me a call. We'll sit down, we'll run the numbers, we'll look at your current home and see if it's able to be rented for a good amount and if it all makes sense to you. Thanks for watching. Have a great day.